Standard Investment Bank is one of the largest and the oldest investment bank in the country. We're actually celebrating our 30th anniversary this year. So the bank was set up or started in the year 1995 as a stockbroker and eventually moved to becoming an fully fledged investment bank. So the bank is capitalized to currently the tune above over R1 billion shillings. The minimum capitalization requirement for an investment bank in the country as far the regulatory requirement is about 250 million. But of course, by the sheer size of the bank, we are actually well capitalized. We are currently managing assets under management as a bank in excess of 97 billion shillings currently. And we are a regulated institution by the Capital Markets Authority of Kenya. We are also members of the NSE, the Nairobi Stock Exchange, and the Kenya Association of Investment Banks and Stockbrokers as well. So Standard Investment Bank is quite fair. It's fairly an old institution, also one of the largest investment banks in the country, as I had mentioned earlier. So the bank was set up in the year 1995 as a stock brokerage firm, then transitioned to becoming a fully fledged investment bank in 2003. And during that period, from 2003, we were majorly doing corporate advisory services where we were helping institutions in terms of offering IPOs, listing, going public. And through that period, actually, the bank, until today, the bank has undertaken quite a number of transactions, some of them being a very significant or the largest transactions ever done in the country in terms of capital raise in Kenya. Then in 2018, the bank was actually given the first money manager license in the country by the Capital Markets Authority of Kenya. And it's actually in that time that the bank set up the first fund, which we called it Mansa-X fund, which was in Kenya shillings. And 2022, we set up the dollar version of the fund, which we call it Mansa-X Special Fund USD. Then we started another journey in 2023, where we set up the first fully fledged Islamic investment banking window in Kenya. And we were licensed also by the Capital Markets Authority. And we formed what we call today SIB Najah. And within the same period also, we set up the first Sharia compliant fund in the country, which we call it Mansa X Sharia special funds, both in Kenya shillings and in dollar. In 2024, again, we went through another journey to get another license from the Retirement Benefits Authority of Kenya to be licensed as also fund managers, pension funds and pension schemes. So SIB Najah and SIB in general, we are also licensed also by RBA over and above the CMA licensing that we have, who is actually our regulator. So we are also authorized to manage pension funds and pension schemes in the country. So that's a very brief journey, or brief history of the bank to save time as well. So majorly on the corporate advisory services during that period, the bank was managing quite a number of transactions ranging from IPOs or bond issuance, private placements, right issues, takeovers and mergers, business valuations, acquisitions. And during that period till today, the bank has actually undertaken transactions over 300 billion shillings in that line of business or in that area. And we have managed or dealt with almost quite a number of the institutions in the country, both corporate entities and also quasi-government institutions, ranging from the banking industry, whether it's KCB, Diamond Trust Bank, National Bank, where we were actually Standard Chartered Bank, where actually we have helped them, raise capital from the market. And also for National Bank, actually, we were the lead advisor in terms of the takeover of National Bank by KCB Bank. We also did the hospitality industry, the likes of Serena. We have helped them in raising funds or capital. The energy sector, where we actually worked with Kengen when we were actually raised the largest capital raise in the market ever, which was 28.8 billion shillings in 2016, and quite a number of other sectors or entities across different segments of the markets or different sectors of the economy, including manufacturing, the likes of Unilever and several other entities. In the real estate, we've actually worked with Akon, who are as you popularly know them today as the Kwetu, who provide student hostels. Actually, we help them raise the initial fund to set up that venture. so we have worked in different, we have with most of the big names in the country in that space. So SIB Najah, as I had mentioned, is the Islamic investment banking division of the bank, or Standard Investment Bank, that specializes in providing Sharia compliant investment solutions to the market, but doing it in line with the Islamic Sharias or the Islamic principles. And we engage, or our client base includes the diverse segments of the market, whether it's a retail investor, institutional investor, the corporate, high net worth individual, pension schemes and pension funds. So SIB Najah is the Islamic investment banking division of the bank that does Sharia compliant investment banking solutions. And we majorly offer 4 key areas in SIB Najah. One is equity trading or equity trading. Majorly meaning we help individuals, institutions, investors access the stock markets, whether in the country, in the NSE, or across the major markets in the globe, where we will be able to help you access or buy, sell the equities or stocks, whether it's single stocks or indices. And what we do now, being a Sharia compliant solution provider, we normally vet the different stock exchanges or markets in the country, and also the other markets across the globe. And we will help you, tell you, out of, for example, the listed NSE companies or stocks, these are the ones that are halal or compliant from a Sharia compliant perspective, and these are the ones you will be able to buy. And we'll be able to help you buy them, hold them over the life of your investment. And as you also hold it, we keep monitoring the compliance aspects of those particular stocks or equities that you have taken or you have invested in, and we'll be able to advise you whether they have remained compliant from a Sharia perspective or not. And when you're also exiting, we'll be able to help you do, if there's any purification on the income that needs to be done from that particular investment. So we do equity trading. We also do fixed income trading, majorly focusing on the Sharia compliant bonds, which we refer to them as sukuks, both, of course, sovereign sukuks and also corporate sukuks issued by corporate entities. We don't have much of a market or developed sukuk markets in the country. We therefore deal mostly with the global markets, mostly in the Middle East and the Muslim countries, North African countries, West African countries, where actually the issues of sukuk by both the sovereign governments and also by the corporate entities is actually well developed. Also the Far East Asian markets like Malaysia, Indonesia, a bit of India, and also quite a number of countries in Europe also have done sukuk issuance. So we trade them at that level, not in Kenya. We are actually, the Kenyan market from a sukuk perspective is still developing, and we're actually working closely with the regulators and the government, departments, to make sure that we develop that sector and make sure we have issuance of sukuks in the country, inshallah ta'ala. We also offer corporate advisory services, or what we refer to as generally corporate finance, where we help institutions raise capital from the market, and we do it also now within the confines of the Sharia, and help you structure the capital raising within with a Sharia compliant instruments or structures that are halal. We also offer the fourth and the last most important thing, which will be actually forming the subject of our discussion today, is our wealth management services, where we have our Sharia compliant fund, which is actually, as I mentioned earlier, it's the first of its kind in the market, and actually in this region, where we call it Mansa X Sharia Special Fund, operating both in Kenya shillings and dollar, so that for those of the investors who are looking, whose income or cash flows are in dollars, can be able to invest in the dollar fund, and for those whose income is in shillings, will be able to invest in the Kenya shilling fund. So I'll go into details on our wealth management product, which is our Mansa X Sharia fund, which is the fund that I wanted us to discuss this evening. So Mansa X Sharia fund is a multi-asset strategy fund that invests in the global markets. So what we mean by the multi-asset strategy fund, we mean when we collect the funds from the different investors, whether you are an individual like yourself, an institution, a pension scheme, or a high net worth individual or a corporate entity, we normally collect all these funds or these investments into a pool, and we invest them on your behalf into a different asset classes across the major markets in the globe. We have currently been approved by our Sharia Advisory Board and also by the Capital Markets Authority, who is actually our regulator, about 9 different asset classes where Mansa X Sharia fund is invested in. So when we collect the fund, we deploy or invest the fund into different asset classes, currently about 9 of them, where we do trade and drive investments or return for our investors. And the reason why we have adopted this kind of a strategy, which is now diversifying the investments across our different asset classes, is to, one, diversify the risk on the fund. Which means so that if the fund is invested into, like, let's say 9 different asset classes, which is what we have currently, even if one of the asset classes actually is impacted negatively or underperforms, at least we have 9, 8, or 7 of the other asset classes performing well or safe, thereby safeguarding or de-risking the fund from that exposure. So we therefore don't invest the fund in one particular asset class or one particular investment portfolio. We diversify and spread the investment across that 9 different asset classes. The other reason why we do that diversification also is to make sure we maximize the return for our investor, which means if, for example, we have investments across the 9 different asset classes, 1 or 2 of them actually is facing a downside in terms of the performance of the market in that particular trading period, at least we have 8 or 7 of the other asset classes performing well, thereby bringing up the return for our investors. That's why a Mansa X Sharia fund has been able to achieve above market average return for our investors across the period that we have been operating. We, as I had mentioned, it's also a global fund, which means we do our investments across all the major markets across the globe. We therefore don't make the investments only in Kenya. We have the investment spread again across different markets at any given time. You'll find actually in one particular quarter, we have investments across 4 to as high as 7 different markets at a time. So again, we don't make all the investments in one particular market, so we spread the investments across the markets in the globe. We have counterparties across all the major markets, thereby allowing us to have investments happening across those markets. And the reason why we do that also is to diversify the risk from a geographical risk perspective, so that if one market has a problem or a downside problem in a particular quarter or a season, we have the investments in other markets doing well and operating well, thereby giving us now at least making sure that our investors' funds is not affected by any dynamics from a geographical perspective on a particular market. We also do that because so that we also give our investor an opportunity to enjoy or take advantage of the maximizing the return for our investors, so that if one particular market is not performing well in a particular season, at least 2 or 3 or 4 or 5 other markets that we're invested in are actually doing well, thereby absorbing the downside on one particular market at any given time. So that those 2 strategies, actually being a multi-asset strategy and also being a global fund, a globally diversified fund, is actually one of the unique strategies Mansa X Sharia uses to deploy the investment and also make sure that our investors are enjoying good return at the end of the day, and also their investment is protected or the risks at all at any given time. We also, there being a Sharia compliant fund, means the basic underlying principle on all those investments again is all our investments are in line with the Sharia. We have a fully fledged Sharia board that guides the fund from a policy perspective. They have to approve all our policy and our investment strategies. They have to approve all the asset classes in terms of where we are investing in, and all the instruments that we deploy in using when we're doing the investments. And also we have a fully fledged Sharia department within the bank that sits with our global trading team that vets and makes sure that every transaction or investment that is being entered into is in compliance with the Sharia and also in compliance with the investment policy as approved by our Sharia advisory board and also by the regulator. We therefore don't invest in instruments or asset classes or portfolios that are not compliant from a Sharia perspective, that have anything to do with interest, uncertainties, in sectors or industries where that are not halal, where like the alcohol, gambling, and any other non-halal industry for that matter, we don't invest in, and we have that internal Sharia department that vets every transaction the team is making at any given time to make sure that all our investments are halal, and that at the end of the day, the return that we're giving back to our investors are halal returns that they can be comfortably able to take home without worrying about anything. As I had mentioned, the fund operates the two funds, which is the Kenya shillings, two currencies, sorry, which is the Kenya shilling fund and also the dollar fund. These are two distinct funds. That's if you invest in the dollar fund, you will have your investment in the dollar fund. And if you invest in the Kenya shilling fund, you will have your investment in the Kenya shilling fund. The fund has a minimum investment or a joining investment of 100,000 shillings for the Kenya shilling fund and $1,000 for the dollar fund. From there, you will be able to top up your investments based on, of course, your cash flows and your income, and you will be able to do it on a weekly basis, top it up on a weekly basis, monthly basis, depending with the flexibility of your cash flows. The fund has a lock-in period of 6 months, which means when you invest, we request the investor to allow us at least 6 months to be able to do for them a meaningful investment, also where they can be able to enjoy a meaningful return for their investment. The fund also has a service or a management fee of 5% per annum, again, prorated over the 365 days, which means that the 5%. So if you have invested with us for 1 year, the management fee is 5%. If you have invested with a fund for half a year, for example, it's actually 2.5%. So it's because it's prorated on a daily basis over the 365 days. The fund also has a performance rate of 10% above the hurdle rate, for which the Kenya shillings hurdle rate is 25%, and the US dollar fund, the hurdle rate is 15%. What we mean by hurdle rate is that we have said, if, for example, in a particular year, we have managed to do a very good, investments, and the market has been good, and we have tried our best and made sure we achieved a very good result for our investors with a return of above 25%. So let's say 27%. The fund, the Mansa X Sharia, SIB Najah will take 10% performance fee above the hurdle rate. So which is now 25 minus 27, that differential 2%, we will take 10% of that differential over and above the normal management fee, which is our hurdle rate. But if we do anything 25 and below net of the fees, then we only applicable charge is 5% management fee, which, as I had mentioned, is prorated over the 365 days of the year. And also for the dollar rate, the hurdle rate for the dollar is 15%. So which means if we do more than 15% net of fees, which is, let's say, like 17, 18%, that differential 3 or 2%, the fund will take a 10% performance fee over and above the management fee of 5%. So that's what we mean by hurdle rate. A very important point also to note within the Mansa X Sharia fund is Mansa X Sharia fund is a highly liquid fund, which means an investor will be able to access his or her fund at any given time. You're required to have access, you're required to access your fund partially or fully. You will be able to access your fund anytime that you may have a requirement for it. You will have your
Allow
fund.
me ask a question.
Sorry, yes.
I want to ask a question. According to what you've displayed in the information that you've displayed on our wall, that is the screen, your screen. He's talking about the minimum investment of 100,000. I saw somewhere that the minimum investment is supposed to be 250, or this one is just for locked amount. What is the difference?
Allow me to finish. I've noted your question. Allow me to finish, then I can take the questions at all of them once, please.
All right.
The minimum investment, this is Mansa X Sharia. The Mansa X Sharia fund, the minimum investment investment is 100,000 shillings for the shillings and 1,000 for the dollar. So this is for Mansa X Sharia special fund. That is the minimum investment period. So as I was mentioning, the liquidity aspect of the fund is one of the most important features of this fund, which means an investor will be able to access his or her fund at any given time. And once you're given the instructions to withdraw partially or fully, within 2 to a maximum of 3 working days, you will have the funds in your account. Another very important point also to note for the fund is that Mansa X Sharia Special Fund, under the 2023 Finance Act, actually we got an exemption from tax, which means the return that the fund will make and the net return that you will be able to earn at the end of a particular period, whether it's the quarter or the year, is exempted from any taxation. So it's a net return that you will take home at the end of the trading cycle or at the end of your investment period. Now, as I mentioned, we're investing in about 9 different asset classes where the fund actually is investing in currently, as approved by the regulator and also by our Sharia Advisory Board. And some of the approved asset classes where the fund is currently investing in include quoted halal equities or stocks, Islamic indices, Islamic private equity, sukuks, both corporate and sovereign sukuks, commodity trading, majorly gold and petroleum, Islamic ETFs, Islamic rates, and Islamic credit instruments are some of the asset classes where Mansa X Sharia Fund is investing the investments in. Now, the benefits of being part of joining the Mansa X Sharia Fund is, of course, the ethical aspect of the fund, which is from here, the Sharia compliance. So, which means your investment is managed in an ethical manner in line with the Islamic Sharia, thereby giving you a halal return at the end of your trading period. So whatever return you make from the fund is halal and within the confines of the Sharia. And that's why we have a fully fledged Sharia supervisory board that oversees the fund. Being a global fund, as I mentioned earlier, you will enjoy the global diversification of the fund, which intends basically to minimize the risk and also maximize the potential for attractive return. So even if there's a downside of a particular market, for example, if the Kenyan market is not performing well in a particular given period or a trading season, at least we have the capacity to move the investments to other markets and enjoy the benefits of the performing markets. And that's why Mansa X Sharia Fund is able to move its investments from one geographical market to another based on the seasonalities of the markets and also the performances of those markets, and also helping us managing the downside risk of the investment. Being one of the largest, as I mentioned, and one of the oldest investment banks, we bring on the table a lot of expertise in managing similar funds, and thereby giving us a lot of knowledge and understanding in managing the Mansa X Sharia Fund, and also having a very in-depth, information and understanding in terms of the market, its seasonalities, which markets perform well in particular seasons, which investment classes or asset classes are, do well in which particular business cycles or trading cycles. So Mansa X Sharia, SIB Najah brings on the table a lot of many years of experience and expertise into managing the Mansa X Sharia Fund. We are a regulated institution, as I had mentioned, so we therefore are committed and adhere to the highest level of transparency and accountabilities. And we, in that note, we normally declare our returns every end of the quarter. So at the end of every quarter, as required, the investor will get a statement. So if you have invested $1 million shillings, you'll get a statement automatically at the end of every quarter, giving you that this is your investment of 1 million shillings. This is how the fund performed, and this is the return the fund has been able to generate for this particular period. And this is your statement, and this is your profit for that particular period. So at the end of every quarter, the investor will get a statement of his or her account and investment, and it will give you the performance of the return that you made for that particular quarter. We also publish a document which we call the fact sheet, which is a very detailed document that explains how the markets performed in a particular quarter, How did the fund perform in that particular quarter? What was the return in that particular quarter? How did the fund grow in that particular quarter? And where did we invest in that particular quarter in terms of the top 10 holdings of the fund in that particular quarter? And the reason why actually we do this, other than, of course, the regulatory requirement, is to also show our investor where exactly their fund is invested in. That, and indeed, the asset classes where we're investing in are compliant or are halal investments, and you'll be able to query it, and you'll be able to look at it and understand exactly, indeed, where the funds are being invested are halal investments or asset classes or portfolios or counters for that matter. So we normally publish a very detailed document that details the top 10 holdings and how the fund performed in that particular quarter. And that document, we publish it normally on all our websites, our social media pages, and we also share it with our investors at the end of every quarter. So our information and the performance of the fund is normally a very public information that we, being a regulated entity, are required to publish at the end of every quarter. Of course, also being a regulated entity, we have to comply with all the regulatory requirements, and thereby ensuring that we adhere to the highest regulatory standards, which gives you the peace of mind about the security and the legality of your investment, that is being regulated by a regulated entity, here being the Capital Markets Authority of Kenya. Well, of course, as I mentioned, we have also a fully fledged Sharia oversight body that oversights the fund from a Sharia compliance perspective, thereby giving you peace of mind in terms of knowing that every investment the fund is doing is in compliance with the Sharia, that every transaction Mansa X Sharia goes into is a halal transactions that we are undertaking, and that the return that you're taking home at the end of the day is a halal return. Now, another very important point that I probably wanted to note is how do we manage, from a risk management perspective, is one of the measures that we put in place to manage the risk of the fund is basically, of course, from a compliance perspective risk, we have the Sharia Supervisory Board that oversights the fund. They normally conduct audits on the fund at the end of every quarter to see that where did we invest in that particular quarter, and is it in line with the approved investment policy and within the defined asset classes, and is it in line with the Sharia or the ethical principles that has been approved by the Sharia Oversight Board. So the Sharia Board normally audits the fund on a quarterly basis to make sure that we're doing the right things and the investments were done in compliance with the Sharia. Then we have, as I mentioned, the asset classes limit. Of the asset classes that actually I've talked about, we have, again, limitations within the asset classes that restricts the investment, so that we can't just wake up one morning and say we're investing all the funds in one particular asset class because it's performing well. No, we have limitations. So for example, if it's equities, we have a limitation in terms of, let's say, 20% of the portfolio or 25% of the portfolio. If it's commodities, we have, let's say, 30% of the portfolio. If we have Islamic ETFs, we have, let's say, 30, 40% or 20% of the portfolio. So again, within the asset classes, we have limitations. So that's why you'll find the investment at any given time is well spread and well diversified across the 9 asset classes that we have been approved for by the regulator and also by our Sharia Advisory Board. Again, we have sector, industry, and geography limits. As I mentioned, being a global fund, which is again invested across the major markets in the globe, we have again limitations in terms of how much of the fund can be invested in one geographical market. So that, for example, how much of the portfolio can be invested in Kenya at any given time. We have limitations. We can't just wake up, say, the Kenyan market is performing well, let's invest everything here. Or the US market is performing well, let's invest everything there. We have limitations. So if it's Kenya, maybe let's say it's 30% of the portfolio. If it's the US market, let's say it's 30, 40%. If it's the GCC countries, it's 30, 40%. So again, you'll find we have limitations in terms of the spread of the fund across the different geographical markets. We also have, again, within the asset classes, again, the sector and the industry limitations. So we can't just, for example, if we're investing in equities, for example, we can't invest in the health sector, everything. Again, we have limitations within the sub-limitations within the equities in terms of the sector and the industry. So we have to spread the investment, again, 10% of it in the health sector, 20% in the manufacturing, 30 in technology. And again, so that's why you find we're not only diversified from an asset class perspective, but we're also diversified from an industry perspective, sector perspective, and also the geographical, diversification perspective. And we have limitations within our investment policy as approved by the regulator and also by our Sharia Advisory Board that manages the fund from that perspective. That's why you'll find Mansa X Sharia Fund is a highly diversified fund, not only from an asset class perspective, but also from a geographical, sector, and industry perspective. We again have within our dealing global trading team limitations again on dealer limits, whereby means we have limitations in terms of where one particular trader or dealer within our investment team, or sorry, global trading team, cannot handle all the portfolio. Again, they have limitations in terms of how much of the portfolio can be managed by or invested by or dealt with by one particular dealer at any given time. And that's why, again, you will have the fund trading done across different dealers within our global trading team. We have, again, within the bank also at the board level, an investment committee at the board level of the bank that also guides and manages the investment of the fund. And the board sits, the investment committee sits on a weekly basis, and every week that they sit, they review the performance of the fund on the previous week, while the limits adhered to, while the asset classes limitations adhered to, while the geographical diversification of the fund adhered to, and what is the strategy of the fund in terms of the investment for the next week. And they are the ones who will guide and approve the strategy of the investment of the fund on a weekly basis. Again, being a public fund, regulated by the Capital Markets Authority, we have an independent body that also oversights the fund, which we call trustees. Trustees are normally an independent corporate institution that's also regulated by the Capital Markets Authority that oversights the fund and audits the fund at the end of every month to make sure that we are doing the investments in line with the investment policy as approved by the regulator and also by our Sharia Advisory Board. And again, of course, the regular regulatory audits where the Capital Markets Authority of Kenya also audits the fund at the end of every quarter, and they go through every transaction that we have done and find out whether we have managed the investments in line with the investment policy as approved by the regulator and also by the Sharia Advisory Board. Now, all these measures is to make sure that the fund is managed from a risk perspective, and we always manage the downside risk of the fund to make sure that our investors' funds are always protected at all times. As I had mentioned, we have a fully fledged Sharia Supervisory Board comprising of 3 ulamas, headed by our chairman, Dr. Sheikh Muhammad Islam, who is a well-renowned scholar based in Mombasa. We have also Sheikh Abdurrahman Guhan and also Sheikh Ibrahim Rashid, both who are imams in one of the mosques in some of the mosques in Nairobi. All the 3 sheikhs have their qualifications in terms of bachelor's degree in Islamic Sharia and also master's in Islamic Sharia from Medina University and also from Al-Azhar University in Egypt. They also have, over and above their Sharia qualifications, Islamic finance qualifications from Malaysia. Dr. Sheikh Muhammad Islam, for example, has master's and PhD in Islamic finance from Malaysia, while the 2 other sheikhs also have qualifications from Islamic finance from Malaysia, various Malaysian universities. And the reason why we chose these 3 ulamas is not only their knowledge and understanding of the Islamic Sharia, but also in addition to that, their understanding and knowledge and qualification of Islamic finance. And they are the ones who are actually guiding the fund from a Sharia compliance perspective. I will stop at that. Thank you very much. And I will open the floor for any comments or questions that you may have. Thank you very much. Karibuni sana. You can raise your hand and we'll call you out, or you can write on the comment on the chat section and we'll be able to take it up, your comments or questions, inshallah. Karibuni sana. Simeon.
Thank you very much, Abdullahi, for that wonderful or insightful session that you've taken us through. So we will go now to the questions. If you have a question, you can just write it on the section provided on the right side of your phone or laptop, or you can just put up your hand. So we'll start with Saima. Saima, you can go through. We'll start with Saima. Thank you.
Assalamu alaikum.
Alaikum salam.
Yes, mine is more of a clarification. In the beginning of your presentation, okay, first and foremost, thank you for the very insightful one. I think I learned a lot. But in the beginning, you talked about the Mansa Sharia X being able to sort of purify earnings. Then later on in the presentation, you talked about investing in halal investments. I'm aware that you might correct me on this, that when you need to purify earnings, it's when it's coming from sort of investments that have interest, and that's when you then need to do that. So please just clarify that for me, how that happens. Yeah.
Thank you, Saima. Yes, when I was talking about that is when I was talking on equity trading. So what you'll find is, for example, on the equity trading or stocks, what we commonly refer them to here. And I'll give a practical example. For example, if you have invested in one of the allowed or halal counters, which we, after vetting in the Nairobi Stock Exchange, that as a Muslim you can be able to invest and we consider it to be a halal investment, is, for example, Safaricom. But Safaricom by nature, their underlying business was, is a halal business. The telecommunication, data, messaging, internet. Those are the key primary services that they provide, which are halal activities. But within Safaricom, I think the last few years they have introduced what we call Fuliza, which is an interest-bearing service that they have added into their products as a retention strategy. So what we normally look at is there is definitely a line income for Safaricom within their revenue that is interest income from the Fuliza. But when you look at it from a scale in terms of the overall revenue of Safaricom, it's actually about less than 1% of the overall revenue of Safaricom. So Islamically, or the ulamas have actually given a fatwa under the AWFI standard that yes, for such institutions, you can do the investment and you can invest, but whatever return you make at the end of your investment period, you have to donate 1% of that return, equivalent to the non-halal return from the overall revenue, into charity. And that's what we mean by purification. So if you go to investments like, for example, equities, which have such kind of non-permissible revenue within their revenue stream, again, you have to do that purification. Again, under the AWFI standards, that non-pure revenue must not be more than 5% of the overall revenue of that particular business. If it's more than 5%, 5.5, you cannot invest in that entity or that what do you call asset class or in that equity. So that is what I meant by that same, and I hope it clarifies. You have clarified the question. So normally what you do, the equivalent, we have to remove it from the return and put it into a charity account, and that money is normally given away to charity to support the society and the community for charity purposes. That is what I meant by that. So I hope answers the question.
Very well, shukran.
Thank you. Okay, Nyabuto, you can ask the question now. OM, you can unmute and go ahead. Nyabuto, I don't think you can. Okay, so as I wait for someone to raise their hand, I'll take the questions on the message. Yes, go ahead.
And I wanted to ask a question regarding the management fee.
Yes.
Is the management fee based on the hurdle rate that you gave us, which is the 12% and 25% that you gave us, or how do you calculate that 5%? Where do you calculate that one from? The management fee money.
The management fee is of 5% is applied or charged on the investment and or the asset under management that you have per investor. So it's not, the hurdle rate is completely different that I explained earlier, but the management fee is the fee that we're charging based on your investment. So for example, I'll give you go ahead.
So let's say I've invested $1,000.
Yes.
At the end of the year, your management fee is 5% of that $1,000.
Yes.
So in short, and you gave us a hurdle rate of 12%. So in reality is that at the end of the year, we will not be
15%.
getting to 15%. So at the end of the year, we will not be actually getting that 15%. We'll be getting 10% because because the 5% of
Let
that
me explain
15% is going to the
Sorry.
management.
No. Let me explain for you.
Okay.
What we mean by management fee is this is the service fee charged by the fund manager, which is now SIB, to manage the fund on the investment on your behalf, and it's capped at 5% per annum. So what we mean by that asset under management that we have invested with us is what we charge. So we are investing the fund, and whatever return we make. So let's say this year we've invested and we made a return on the investment of 20%. So that 20% is what we're taking 5% out of it, and you go with 15%. And I'll give you a very practical example. This year, for example, we have based on our actual performances the last 2 quarters, we managed actually to achieve a net return, net of fees, for the first half year of 2025 of 8.5%, if I'm not wrong. Yeah, 8.51% net of fees. So this year, 2025, for the full year, we are projecting to make a return net of fees of above 17% for the Kenya shilling. And this is based on our actual returns on Q1 and 2 and 3, which actually now we are almost closing, and inshallah ta'ala the 4 that we're projecting. So this year we're looking to do a net return for our investors on the Kenya shilling fund of above 17%. So when we do 17 net, means our return was much higher because we have taken the management fee. On the dollar, we're looking at a return of above 11.5% this year, based on the performances of Q1 and 2. We are giving a return of above 11.5% in 2025, inshallah ta'ala. So that is what we mean. Now, the hurdle rate is completely different. We're saying if this 17%, for example, we do well, and this 17% of the shilling goes to 27%, for example, we had a good year and we managed to achieve a return of 27%. Over and above that 25, that 2%, that between 27 and 25 is what we're saying we'll take 10% out of that, is what we'll share as a performance fee. That is what we mean. And that's how we charge the management fee. And the result that we have declared are net of management fees. These returns of 17%, for example, for this year, will be a net of the management fees and taxations. This is what you're taking home.
Okay,
Hope that answers your question.
let me see if I understood it properly. You said that after close of the year, Q1, 2, 3, 4, you have closed it, and the rate, the return you are guaranteeing us, that you are saying that we give you 20%. It means that you have already deducted your 5% management fee out of it.
Yes.
Which is the takeaway home 20%.
Yes.
Okay. Let's assume that now you have made 30%. You took your let's assume you made 33%. You took your 5% home.
Yes.
This is hypothetical. I don't have to be writing the calculation.
I get you.
Might be wrong. Okay, so 33, you took your 5, it came back 28%, 28, you have 3 above the hurdle rate, which was 25. So out of that now 3 again, you will take 10%. You say 10%.
Yeah, on the return, yes.
Of on the return, yes. Because the 3% you'll again take that 10% out of it again. So you are guaranteed on the best year, mashallah, the best year you have done 33, you are guaranteeing me that you will give me my 25, and anything above that 25, and you have already removed your 5%, then we will again come to share 90-10.
Yes.
Okay, very well understood.
That's the hypothetical, yes, it's correct. Banu, go ahead, please.
Hi, thank you so much, Mr. Adan. Good evening to everyone. And first of all, I wanted to start by saying thanks for the presentation. This is my second time attending an SIB webinar. Always very informative. And so thank you and your team for keeping us alert about your webinars. My question today is slightly different. When you started speaking a few minutes ago, you mentioned about the sukuk market and that it's still very nascent, it's developing. So my question is that beyond personal wealth creation, which I think many of us are interested as in individuals, we would like to grow our wealth with these different Islamic, Sharia compliant vehicles. How do you see the sukuk and other Islamic finance instruments helping us, Kenya, as a developing country, to mobilize capital for our development needs? I'm sure you will appreciate, Mr. Adan, that right now, Kenya, like many other African countries, is struggling with its debt crisis. We are struggling with climate change, and we are struggling with many other development challenges. So how does, what's the role of Islamic finance in helping our countries to come out of this kind of crisis?
Thank you, Ivan. Very good question, because if you look at the one of the ways the government normally raises funds is through, of course, the bond issuance, which what we're saying is sukuk is basically an Islamic bond, majorly used to finance infrastructure development for the country. And it's honestly it's come a long way, and alhamdulillah, we are actually on a very good stage now where we're in after quite engagements with the relevant authorities and regulators. And what actually we are fighting for currently, and hopefully it's going to maybe happen, inshallah, as we expect by next year. When the government wants to raise funds from the market, we're saying at least give 20% of it to the Islamic markets, make it an Islamic bond, mainly to finance infrastructure developments, and then continue with the 80 through your normal T-bills and all those kind of things, the normal bonds that and treasury bills that you normally use to raise funds. So that's actually a proposition that's currently in good discussion stages. And we're very hopeful that once that develops, means now the government will give opportunity to the Muslim community, both locally and internationally, to participate and also give the government funds to do infrastructure development. Now, if you look at, for example, in the Kenyan market, the way the treasury bonds and all those kind have been the formal way of the government raising. Any institutional investors or individual investors who are able to participate have been able to grow their wealth by lending to the government, and of course getting interest returns at the end of every year, guaranteed comfortably. While a Muslim investor will not have been able to take advantage of that opportunity, thereby having his funds sitting idle somewhere because he cannot participate in the T-bills or the government bonds because of the interest aspect. Now, once the structure is now done and the Islamic sukuks are issued, means the idle funds from the Muslim community, both locally and globally, will now be accessed by the government, and the government now will diversify its capital raising or fundraising from the old way of doing it now to tapping to a new, section of the society. And I'll give a very practical example also is we have quite a number of Islamic banks in the country who are actually operating. If you compare them, like on like to the conventional banks, their returns or their profitability is very low. And one of the biggest reason is that when you are a financial institution like a commercial bank, you need liquidity management instruments other than the loans that you're giving. And the commercial banks, what they do is they give the funds, lend it to the government at a good rate, and they make profit or they make an interest income from it. While the Islamic commercial banks that are actually operating in Kenya have been struggling because they cannot deploy their funds into the current structure of the government borrowing through the T-bills or the bonds, or the Euro bonds and the likes, because of the interest-bearing aspects of those instruments. Now, when the government provides that alternative vehicle or instruments for borrowing, which means now also the Islamic commercial banks will have now a relief, and they will be able to deploy their excess liquidity by lending to the government, thereby making a good or a halal return from it, and they will be able to competitively compete with now their peers and grow the Islamic banks. So, and definitely also it will attract the funds from the other Muslim countries, whether it's the Middle East and the Far East Asia, Indonesia, to be able also now to lend to the Kenyan government. So it will definitely, by all help the Muslim society, giving them guaranteed investment vehicles where they can lend to their governments and grow their wealth through at the end of the results, and also participate in the development, the infrastructure development of the country. Those are, I think, some of the benefits that I can remember currently. But given the short timelines, and we are very optimistic that next year a lot will change in that space, and quite a number of sukuk issues will be happening, inshallah ta'ala, for that matter, both at the government level, sovereign level, and also at the corporate levels, inshallah. Ramadan?
Yeah, thank you so much, Mr. Adan. And I think this calls for a deeper conversation. I hope we can have a webinar in one of your future sessions, talking about this kind of developmental issues and how Islamic finance can play a very significant role, but not for today. And thank you for your elaborate explanation.
Definitely, Banu. Thank you very much. We'll work on something. Ramadan, karibu sana. Okay, I'll take the questions on the chat. What happens in case you make a loss? From Muhammad, we as I had mentioned, we are a fund that deploys its trades in the global markets on a diverse asset classes across diverse geographical markets. And one of the ways actually we are managing the downside risk or the loss on the fund is through the diversification. So if your investment is diversified across 9 different asset classes, diversified across different industries and sectors, diversified across markets across the globe, it's one of the ways actually Mansa X Sharia is managing its loss. And alhamdulillah, so far, from the inception till now, our operations for those years, we have never encountered any loss on the fund. Yes, return will vary, as you have seen from the display return from quarter on quarter. One quarter might be very high, another quarter might be low, but alhamdulillah, we have not seen any loss, and that's how we are managing the losses through diversification. Yes, during the trading period, we might have losses happening on one particular asset class in a particular period, but overall, the whole diversification strategy is to complement and to make sure that at the end of the quarter, we have a positive return for our investors. Ramadan, if you are there, you can take it up before I go to the second question.
Assalamu alaikum.
Wa alaikum assalam wa rahmatullah.
Okay, thank you so much for the chance. I have one question. Considering return on investment as a more practical alternative to conventional investing methods and the associated management fees, what makes SIB Najah a compelling and Sharia compliant investment choice? Specifically, how does it align with Islamic financial principles while delivering value and returns to investors?
Okay. Ramadan, maybe it looks like you have missed the earlier part of the presentation, which I actually explained initially. So what we're saying is that with the fund that we're managing, Mansa X Sharia fund is a Sharia compliant fund that invests in acceptable or halal in asset classes. And every investment that we are doing where we're investing the funds into to make a return for our investors are already approved asset classes by our Sharia advisory board. And also we have an a Sharia department within the bank that monitors every transaction that our global trading team is doing is in line with the Sharia. So all the investments we're doing, we're investing in halal asset classes or vehicles. Thereby the return that we're getting from them are halal returns that our investors can be able to take home. We don't invest in any non-halal activity. We don't invest in any industry or particular business or asset class that has interest income or instruments that are actually interest bearing. We don't invest in any business that is non-halal. We don't invest in hedging or derivatives or instruments that are not compatible from a Sharia perspective. And that's how Mansa X Sharia is a Sharia compliant investment vehicle. or fund for that matter. I hope that answers the question. Tayan says hypothetically, if one uses other stockbrokers but selects specific stock which are halal, KPLC, or investing via yes, you can invest. There's no harm as long as you understand and you can be able to vet that the particular asset class that you are investing in is a halal. A company that you're investing is a halal company, and that their returns are halal, and their thresholds from an income, actually, as I'd explained, perspective, it has no non-halal or impurities within it. There's no harm in investing with a non-Islamic broker, because the broker is only facilitating you. But the advantage with doing or investing with an institution like ourselves that is conscious on the Islamic aspect is that we have mechanisms and systems that vet stocks throughout on a weekly basis. So, for example, if you're invested in KPLC, today KPLC might be on the category of being halal in terms of its income being not driven from an interest element. But after 2 months or 3 months or 1 year, they might lapse and become non-compliant from a Sharia perspective, and will be able to advise you and monitor that on a weekly basis. But there is no harm. If you have the capacity to vet and monitor it from your end, there's no harm in using any broker for that matter. I hope that answers your question. Let me pick up the Wahida Muhammad. I have 3 questions. One, are your books standalone from the standard group interest-based services? Yes, the Mansa X Sharia fund, both the dollar and the Kenya shilling funds, are independent funds, licensed and regulated independently by the Capital Markets Authority of Kenya. So yes, our books and our accounts are completely segregated. And even when we publish our financials for the year or the half year, we publish them completely separate. So there's a clear segregation of the funds from a regulatory point, and also from an accounting point of view, and from also an investment point of view. Do you have any certifications, fatwas from global recognized institutions? We have an independent local Sharia board that guides the fund from that perspective, and we comply with the overall global Sharia standards, financial accounting standards, which are majorly the AOFI standards. Do I get to choose where my funds are invested? Well, yes, once you invest in the fund, the Mansa X Sharia fund is a discretionary fund, which means we invest in the already explained asset classes, which diversifies the investments. So you will be able to benefit your funds being invested within the pool across the different asset classes that we have spread, as I had explained earlier, and which is one of the strategies in terms of how we're diversifying the risk on the fund and also maximizing the return for our investors. Just clarify more on how the purification of I think that one I have explained it earlier. I really appreciate your presentation on Sukuk bonds. Will you please work on their key features so we can understand them better? As I mentioned earlier, this is from Google. Sukuks basically are what we refer to as Islamic bonds, or when the government is borrowing or institutions are borrowing, they normally issue bonds, whether issued by the government, which we call them as a sovereign bonds, or issued by an entity or a corporate to raise a fund or capital from the market. So it's basically the way the government borrows from the market or an institution borrows from the market. Now, from an Islamic perspective, because the normal treasury bonds or the Euro bonds are not compliant from an Islamic perspective because of the interest benchmark or the interest earning aspect of them, Sukuks are basically meant to support or finance a specific underlying asset. So, for example, if the government wants to, for example, do another expressway, which they will has a toll and will be charged, they can now raise the Sukuk, funds through a Sukuk from the market and say we want to develop this expressway from, for example, Nairobi to Mombasa or from Nairobi to Nakuru, and the revenue that collected from that particular expressway is what will be given back to the investor as a profit. And those are however, that's one example of a Sukuk. The structures of the Sukuks vary from the required, from the underlying borrowing need or asset that is being financed a particular period or a particular project or underlying investment project the government is making or an institution is undertaking in that particular matter. And they could be ranging from an ijara structure, a musharaka structure. The structures normally vary. And inshallah ta'ala, Ngugi, we will definitely do a session, as I'd explained with Banu, where we'll now go into in-depth explaining sukuk bonds and how they work and the development from that aspect in the Kenyan market and what we're looking forward to, inshallah. Seima, if you have another question, I can give you.
Yes, please. So my other question is, let's say, let's take, for example, 100,000 Kenyan shillings deposit, right? Then you've mentioned to us that we can top up subsequently with other 100,000, for example, as the minimum top up. So how then do you calculate your the revenue, and is it based on that principal amount, the initial 100,000, or how do you progressively do that? Because let's say in 2 weeks I deposit another 100,000, and in another 2 months this is just within the first quarter. If you could take me through how the calculations would be based either on the initial principal amount or how to do so on the top-ups. Yeah.
Thank you, Seima. We have Islamic investment systems, core banking systems that actually we're using. So every deposit or every investment that you make is treated from the day it's invested in, and it takes its own life cycle, and the system takes care of those calculations. So every transaction that you do is normally invested from the day that you have invested, and they don't mix. So we have the technical capacity from our core banking systems that allows us to now calculate those the revenue calculations, because it will be unfair. For example, you have invested 100,000 January, you have invested another 100,000 in what you call February. We cannot charge the 200 from January. It's charged based on, and that's why I said it's prorated on daily basis for 365 days. So the 5% is divided into 365 days, and that is what is charged on daily basis. So if you had 100,000 in day one, that applies to day one, 100,000. If you second day you have 110,000, it applies to 110,000, and that's how. So whether you even if you deposit on daily basis 10,000, 5,000, we'll still have the capacity to do that, because the management fee is prorated on daily basis over the 365 days. Thank you very much. Yes, Ali has mentioned, we will inshallah ta'ala, actually, as I mentioned also in a previous session, we are organizing with our Sharia board, and we will have inshallah ta'ala one of the sessions where at least all or the chairman of the Sharia board will be part of the discussion, inshallah ta'ala, and anyone who might need further clarification from a Sharia perspective will be able to be assisted. But even in the meantime, Ali, if you have any specific question or you want to get in touch with our Sharia board members, please reach out to our financial advisors, and we'll connect you to them, and you'll be able to ask any question or any clarification that you may need, inshallah ta'ala. Further on the bonus question, Sukuk, will there be time when the fund will be investing in such as the hospital, individually owned, not on government-owned ones? Wahida Muhammad. Wahida, yes, as a part of our private equity, Islamic private equity, yes, we consider a private sector, and if there are any specific requirements or questions that you have, kindly get in touch, inshallah ta'ala, and we will be definitely answer you, inshallah. Banu, as I explained, will definitely, inshallah, in the coming few weeks, arrange for a specific discussion on the sukuks. My question is there any interest at the end? Muhammad Noor, no, as I had mentioned, we have no business, or we don't touch any investment that bears or attracts interest, and all our investments are alhamdulillah halal, and we don't touch any instruments or any investments that are not halal or have interest bearing outside what has been authorized within the AOFI standards in terms of the investments allocation. When the market fluctuates and affects the diverse markets put in place, how do you go about to protect the investors, like the corona pandemic issues? Linus, as I mentioned, one of our biggest strategy in terms of what you call managing fluctuations on the markets is through the diversification. And I'll give you a very practical example. In the beginning of this year, when the new government came in the US and tariffs were actually implemented, it really affected the US markets. But alhamdulillah, because of our diversification from a global markets perspective, we were able to exit the US market immediately. The turbulence has started and actually moved to the European markets. So that diversification allows us to pull from one industry or one sector or one particular market that is being affected to another market. But at the end of the day, also, fluctuations is what basically drive investments, or uncertainties in terms of market movements is what makes markets or investments gain or lose something. So we manage the downside risk of any fluctuations. But if natural calamities like Corona happens, of course, we may not be able to sustain the returns that we're looking at. Things might go lower. And we have to manage and look at which sectors in particular period like those ones, or a pandemic like those ones, will be performing. For example, during Corona, yes, a lot of industries were impacted. Quite a number of sectors went down, but new sectors emerged. Today, we're using Zoom. Zoom are actually one of the sectors that actually have emerged during Corona. So there'll be no entirely, even if there's a pandemic or if it's actually a very big, fluctuations in the markets, doesn't mean that everything will go down. There'll actually be new emerging markets or trends that will definitely be benefiting from any downside that's happening in the market. So, and inshallah, that is the whole point for us managing the fund throughout, in terms of making sure that we're managing the downside and move and shift the investments from one market to another, from one industry to another, based on its performances and the happenings or the fluctuations for that matter, inshallah. Assalamu alaikum. Can investment top up be made at any time of the year? Yes, you can be able to top up your investments anytime, daily basis, weekly basis, monthly basis. There's no restriction. You can top up your investment. Dividend relief, the returns of the fund or the performance of the fund is declared and released at the end of every quarter, and the investor will get his or her statements at the end of every quarter. Jamal, how long does it take to de-invest? We say the investor should initially, on the initial investment, give us at least 6 months period, to lock-in period, to allow us do a meaningful investment for the fund, and also for the investor to enjoy a meaningful return. But after that, there's no time frame. It's based on your investment objective, whether you want to do it for a long term, 10 years, 5 years, 2 years, 1 year, 1 month, 6 months. It's at your discretion. And as I had mentioned earlier, Jamal, the fund is liquid, which means you will be able to access your investments partially or fully anytime that you want. Thank you. Ngugi, you mentioned earlier the minimum investment, and that the minimum top up is no, the minimum top up is any amount. The minimum investment is 100,000. Once you do the 100,000, you can be able to top it up with any amount from there. 100,000, 1,000,000 shillings, 50,000, 70,000. There's no downside. I mean, there's no minimum on that on the top up. Sorry, could you please elaborate further on each of the asset classes? As I mentioned, I don't know the name. It's just reading iPhone thing. We have been approved by our by our regulator and also by our Sharia board currently 9 different asset classes where the fund is investing in. And those 9 asset classes, as I had mentioned, among them include, let me just reshare the screen again. Sorry, the 9 asset classes that the fund is currently investing in, which has been approved by our Sharia board, include quoted halal equities. These are stocks, both individual and indices, Islamic indices across the globe. Private equity. These are investments in entities or businesses that actually we feel have good potential in terms of giving a good return to our investors. Sukuks, as I mentioned, these are Islamic bonds, both issued by, and they can be issued by corporate entities or governments, as I had mentioned earlier. Commodity trading, majorly concentrating or focusing on petroleum and gold, is what majorly we deal in commodities. Islamic ETFs, these are instruments, Islamic, instruments traded also at the global markets, majorly in the stock exchanges, and also Islamic rates or Islamic real estate investment trust units. and Islamic credit instruments. These are the 9 among the 9 asset classes where the fund is investing in, as approved by our Sharia advisory board and also by the regulator. Hope that answers your question. The investment for Tun you can start with is 100,000 shillings as the minimum investment that you can join, and $1,000 for the dollar fund. So I believe that is, if there are no further questions, I will not push it further than that. We will share the presentation, inshallah ta'ala, and also the recordings to your emails, inshallah ta'ala. Thank you once again. Thank you very much again for your time, for making the time to join us this evening. We don't take it for granted, being a work day, taking your time to join us. Thank you very much. For those of you who have not joined the fund yet, please take your time, inshallah ta'ala, and get in touch with one of our investment advisors, so financial advisors, and they will be able to help you and guide you on how to join and open an account. So karibuni sana, and I really, really appreciate your time to joining us in this discussion today. Simeon.
Thank you very much, Abdullahi. This was so wonderful. It was wonderfully presented, and there were so many good questions. So thank you very much. We enjoyed, and you have a good evening. We normally have these sessions twice a month. So if you are looking at joining, or you have a friend or a colleague or a group of investment forums who also want to join, you can reach out to us, and we shall share the links. They register, they join, they get some significant or valuable insights in regards to investment. So thank you very much, and have a good evening.